morning. Let's get started. Armanina McKenna and Heffernan Investment Advisors welcome you to today's webinar, Fundraising for Nonprofits, Communicating Options to Donors and Results on Financial Statements. But before I introduce our two wonderful presenters, I do want to cover a couple of housekeeping issues. The first is that we would like you to submit questions throughout our presentation. It helps our presenters to tailor what they talk about, but we will be answering your questions at the end of the presentation during the Q&A section. So to submit a question, click on the arrow bar to open the pane, and then where the circle is, you can type in your question. Also, I would want to make you aware that you'll have better audio if you click the appropriate mode. So if you're listening through a telephone, please click on what is circled in blue, the Use Telephone button. And if you're listening through your computer, click on Use Mic and Speakers, which you'll see circled in red. I also want to mention that to qualify for California CE, you must do three things here. Use a personal computer, no PDAs, and log in with your own information and unique URL that were provided to you when you registered for this webinar. Be logged into our online software for at least 50 consecutive minutes within the scheduled time frame of the webinar, and actively respond to at least 75% of the polling questions. We'll be asking you those polling questions throughout the presentation today. So now I'd like to introduce our presenters. Our first presenter will be John Allen. He's an advanced planning consultant with Heffernan Insurance Brokers. He has over 19 years of experience in the insurance industry, and he's helped many organizations to assess the value of using insurance policies as a donation vehicle and helping them with communicating the benefits. And he's going to tell us about this new donation vehicle in the presentation today. We look forward to that. Thank you for being here, John. Also, we have Jim Johnson, one of our senior audit managers here at Armanina McKenna, specializing in the nonprofit industry. He's got over 13 years of audit and attestation experience, including 11 years serving in the nonprofit industry. Jim's very knowledgeable about the accounting for donations of all types and will share some of that knowledge in detail today. So let's get to the learning objectives. Today, we are going to explore incentives for life insurance as a donation vehicle, discover how to convert life insurance to a charitable gift, recognize ways to leverage gifts through charitable remainder trusts, which we may refer to as CRTs, learn and analyze fair value measurement calculations for CRTs, and review some required journal entries for recognition. We're going to split our presentation into two sections. The first will be covered by John Allen, capitalizing on fundraising options to donors by understanding and communicating them. We're going to look at how you can create new opportunities through recent changes in the tax environment, a little bit on communicating the benefits, but mostly understanding life insurance as a donation vehicle and how to leverage these gifts through charitable remainder trusts. And then Jim Johnson will talk to charitable remainder trust accounting, focusing on types and fair value measurement and journal entries and disclosures. So our first section, communicating fundraising options to donors, I will turn over to John Allen.
Thank you, Krista. Today, I'm going to speak to you a bit about life insurance and its uses in the nonprofit area, and of course, charitable remainder trust, and really their appeal for our clients. With really the key word for our client today is uncertainty. And uncertainty in today's environment involves estate and income tax issues that we have with our government and what's approaching in capital gains, dividends, and estate taxation. We want, and our clients want, to be able to retain more. They're protecting their assets. We still want to show them how they can use gifting to charities, meaningful assets such as life insurance, and create an income stream for themselves through charitable remainder trust. Before we even begin the discussion about using life insurance as a gifting vehicle, I really want to point out to you that life insurance itself truly is a valuable asset class, not only for the donor, but for the charity itself. It is a distinct asset class that has no relation to the equities or the real estate market, and that makes it a valuable planning tool for the nonprofit. Its risk and return characteristics are entirely different than we have in any other asset allocation. Because of the certainty of that death benefit and the contract that it is, the client and the charity can